And we're live. What's going on, everybody? We're welcome to another show of the Savvy Real Estate Investor. I'm pretty excited today. We have Marty here. He has served 10 years of active service as a naval aviator, and he still serves in the Navy Reserve as an aircraft carrier landing instructor pilot. He graduated from the University of Washington, where he studied finance and marketing. He's an experienced VA loan and has been VA loan officer and has been investing in real estate since 2017 through a home he purchased as a primary residence with no down payment using his VA loan benefits. And now he uses that property as a rental property with a 100% occupancy rate. He also invests using his self-directed IRA in various projects between flips and syndications and outside of work. You can find Marty at home with his wife and three sons and at real estate investor meetups and anywhere the bite is on fly fishing. Marty, welcome to the show.
It's great to be here, Sash. Thanks for having me.
I love it, man. So there's quite a few topics here that I'm pretty excited to talk about. But first, I wanted to dive into the your career in the Navy. Right now, it's a hot topic, right? Because everybody just watched Top Gun. What do you think of that movie? Is there anything in that movie that was probably not realistic?
Probably, I talked to some of my uh, friends I went through flight school with who were Top Gun instructors, and they have a lot of their own technical opinions about it. But as a cargo guy who's more involved in kind of the culture of aviation than the technical side, I really enjoyed it. It was kind of it was described to us as like a love letter to naval aviation. That's how I felt. Like I felt it was they nailed the culture, whether it was at that hard deck bar that they were at or in the ready room. They actually filmed the ready room in the plane that I flew, the C2 ready room. It's the only fixed wing squadron, operational squadron on North Island, San Diego. They used our ready room. They came in there. I was there at the time. They had the big flag draped up. They redid everything for the movie. It was a great time. So
That's awesome. That's pretty cool. Do you get to see it? Do you get to see him recording, or you just saw them setting up the scene for the movie?
we did see him shoot some of the scenes, and they were great. The stage directors, the people that were working for the movie were incredibly nice. They let us eat at the buffet in the morning, and they asked for our opinions on some things. That big book that I think John Hamm throws away into the trash can at the beginning. They had this little tiny one, and we're like, no, 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 the book needs to be this big. So they took it seriously. So it was a good time.
That's awesome. That's awesome. Dude, so I'm let's dive right into this. You are currently a pilot for a major US carrier, but that's your full-time job right now. And obviously you are in the reserves, and you also have a company which is a VA loan company, right? You provide loans.
It is, yeah. We do conventional FHA, all different types of loans, but I definitely specialize in VA loans. Being in the Greater Hampton Roads area is where most of my business comes from, and there's 5 naval bases in that area. So
Got it. So based on your experience, obviously getting a property with some of the benefits of a VA loan is that you don't have to come up to the table with a down payment, right? And that
yeah,
can
I think that's the biggest advantage, especially when interest rates were really low. You could borrow money for your entire home at a lower rate than most savings accounts are now. So that was a huge advantage then, and I think still is. I mean, even the rates right now, I think it's still a really good advantage to do that.
got it. How can someone qualify for a VA loan?
Yeah. So the VA qualifications are you do have to have some sort of active duty service. There are some limits to it, but I actually just had a client last week who was told he wasn't physically qualified while he was in ROTC at Virginia Tech. And so he didn't know that he was qualified for VA loan. And I kind of walked him through the process, which is va.gov. That's the first step. And you can go in and you can check your certificate of eligibility. So there are some other ways that you can be eligible for it than just serving the minimum time limits that are in there. So that best way is to check your certificate of eligibility on the va.gov website. And any VA loan qualified mortgage lender will be able to find that for you as well. The lenders have their own access to the site, and they can pull up anyone's.
Got it. So obviously it's pretty interesting because you can, if you're in the military, let's say you currently don't want to buy a house on your own, but you qualify for a VA loan, you can start getting some rental properties with 100% of the loan amount, and you don't have to come with anything to the table. Is there a number of VA loans that one person can have?
Yeah, there used to be a number on how many you have. There's not anymore. Now it's an amount. I do want to add something to that question there, and let's see here. It was you said something at the beginning there that was about the VA loan. Before you asked about the amount, you made a statement there. I was trying to think what it was there. I was going to add something to it.
Yeah, about getting properties as a rental.
Yeah. So, well, you do. The whole program is designed. The VA program is designed to help people buy a personal property. So I know I rent mine out now, but I lived in it for 2 years, and the expectation from the VA program is that you live in it as a primary residence. Now they understand that people get orders and might have to move before that year is up. Like on a conventional loan, they always tell you to stay there for a year. On a VA loan, they need to plan on being there for at least a year. If you get orders or something that comes up like that, but you can have multiple loans out there, but you do have a limit to how much is in your entitlement. A lot of lenders will let you go above that limit. If it's your first or your only loan that you have out with your eligibility. It kind of gets a little complicated, so I can go into a little more detail if you like, but right now that limit is $647,200 for the whole country. There are counties in certain states, like in Virginia, if you live up in Arlington, close to DC area, it can go up. And I think the highest county, I don't know which one it is in the US, maybe out in California, it goes up to 970,000. So you could essentially buy your first home up to 970,000 and some change without putting any money down. And that was the part of the comment that I wanted to tag on as well. You will bring some money to the table because you're not allowed to wrap in like taxes and insurance into your loan, but you are allowed to wrap in most of the other fees. And I think I sent to Bernhard Capital before the podcast a website that will go over fee structures and what can be wrapped in and what can't, because there's a lot. Veterans United puts out a lot of educational videos on the VA loan, so I put that one specifically on there because that's the biggest one.
Love it. So veterans, I'll put at the end, there will be on the show notes, there will be all the links so that people can go to your company. But just wanted to throw it out there right now. So it's veterans. What's the website?
So yeah. So first of all, Veterans United, we have it's all the mortgage companies are regulated nationally. So their national NMLS ID is 1907. We're an equal opportunity lender. My personal ID is 1973222. So you can find us at veteransunited.com. They spend a lot on technology, and so if you go onto Google, you probably see will be one of the first ones that pop up, and you see /education. That's where all those videos will be. You can get a lot from them.
Love it. So to recap that, so if I qualify for a VA loan, I'm not limited on the amount of loans that I have personally, but I'm limited on the amount of all of the loans collectively. So like if I purchase a home using a VA loan and then I get orders to move somewhere else, I can turn that property into a rental property and then get another loan if I still have remaining amount on that. Let's say that home costed me $200,000 and I'm eligible up to 600 and the amount that you get, right? 600 and something thousand. I can technically go and get another property in another state and use, obviously I'm buying it for my primary residence use, and then there's no issues on that, right? So I will technically have two VA loans out of my name, and then I can just, if let's say circumstances happen that I get orders to move somewhere else to a third location, I can turn that property also into a rental property, and then buy another property as a primary residence. Is that correct?
Very correct. And there are some complications in it. So anybody is following your podcast can give me a call or find me online, or because I'm licensed in Virginia and North Carolina, but it's all the VA loan side of it is national regulation. So it's going to be the same rules on the West Coast as it is on the East Coast where I'm at. So you can have the multiple ones out there. If you go above that limit, so like you said, that example of 200,000, and your next one is 600,000, now you're over by about 150,000. You'd have to put down 25%, and when you're doing the VA loan, there's no way around that. But 25% on that 150,000. So normally it's still better. You're still going to be putting less of a down payment by paying that 25% of the extra on that second home that you purchase than you would if you were doing a conventional at 20% down. Now, I know people aren't putting 20% down on conventional loans right now because mortgage insurance prices are pretty low. So that's also a good option if you don't have the VA loan entitlement, as well as FHA loans are a good way to go for those beginner first time home buyers. There's plenty of ways to get in with little or almost no money down the house. You still got to pay the taxes in most states.
Got it. What are the typical costs for someone using a VA loan?
Yeah, I have that. That I really want to hawk on that educational site because there are a lot of them. But there's it runs down the loan estimate and where to look on costs. It's all nationally regulated right now, so it's hard for companies to sneak in hidden fees and stuff like that. Everything should be upfront. Most loan officers are very upfront with fees today because it's been so regulated since 2008, 2009. And if there's something that you don't understand, I just ask. Let's see. Probably the biggest one for a VA loan is that VA funding fee. That's the VA is insuring your loan essentially to the mortgage company. So if someone who is eligible for the VA loan defaults somehow, the VA loan is going to guarantee 25% of that mortgage amount to the mortgage company. That's why the mortgage companies like them because if home prices go down, someone forecloses on their home, that mortgage company, that bank is still going to get their money back from it after they sell and foreclose or whatever. I know it's not much. People don't like talking about that much, but that's essentially what the VA is guaranteeing you there.
Got it. So we've done flips in the past, and we've sold. Just I guess among the community, people tend to stray away from accepting a VA loan if they can. And dude, honestly, we never have strayed away from a VA loan whenever we get offers. And we've sold many properties to buyers that came in with a VA loan and they ended up being perfect, zero issues. There's a lot of rumors out there of like VA loans being complicated and like making your life difficult as a seller, putting all these restrictions on the property needing to have this or that fixed up. And I mean, it's just like everything, right? They look for certain things, but it's not like they're gonna make you miserable. It was pretty smooth anytime we sold a property to someone that came in with a VA loan. So all those rumors are out there.
I would recommend any listing agent or seller out there that's listening to this that wants to talk to me about it. I think the VA loan can be a stronger loan than a conventional, even because the lenders do really like it. It just, you want to make sure you put in the contract if you have a VA loan buyer that they would guarantee the price over the over the appraised amount, because the VA will not allow the loan to be higher than either the appraised amount or the offer price. So if you have an appraisal that comes in lower than the offer, the loan cannot go above that amount. So if the buyer has another, can get like either a separate loan for that or come up with cash for it. That is, in my opinion, a stronger offer than a conventional mortgage right there.
Yeah, yeah, I agree. Marty, so let's bring it back and talk about that rental property that you have right now. You told me that you bought the property using your VA loan originally, and then a few years later you moved and you turned that property into a rental property, right?
Yes, I did. And I did not move because of a military move or anything. I was separating from active duty Navy at the time. And so I only moved a couple blocks away. My wife she got pregnant with twins, and the house was a little small for her family growing that rapidly. And so we decided to move, but we had lived there for more than a year. And that's perfectly acceptable with the VA loan, especially if you have something, unplanned life event. They're pretty easy with that. I've spoken to representatives from the VA about this a few times. So we did that. We moved a couple blocks away, and I kept it as a rental. At the time, this was 2019, and the area at Norfolk that I found. Now, I did research on the home before I bought it as my primary residence, knowing that eventually I wanted to hold on to it. I'd listened to a lot of real estate podcasts and read some books, and they said, some of the best ways to get into it is buy a primary residence that you'll later rent out. So I found this area in Norfolk, Virginia, that was just north of the Old Dominion University campus, in a nice neighborhood with a good school district around it. And I said, well, that's kind of the best of both worlds there. I can rent it out for higher rents to college students, sell it, can put some sweat equity into it and sell it as a single family home. So the first renters that I had were a group of college students, and I did that for the first, first two years. I did year-long leases with college students. Again, I had listened to a lot of podcasts on how to rent out to certain demographic types or who you were targeting. I couldn't say, hey, I only want college students in here, but at the price that I was renting it out, that's every person that was applying was a group of college students at that time. So I kind of knew that's what I was going to get.
So let's break that down. How did you? So I guess you cannot say I only want to rent to students, but you said based on the price, you were able to target them.
Yeah, essentially. So I wasn't necessarily saying, hey, I only want to rent to college students. I was saying, hey, I want this price, and all the applications that I was getting for that price were college students.
Is it because it's higher than normal, or
it was higher than normal because they were kind of splitting it up amongst themselves per room. Now, I did my research. I'd listened to a podcast of someone who rented in a college town, and they kind of went through how they set up their leases. And I liked this individual's idea of having everybody sign one lease and have one rent check at the end of the month. Instead of collecting 4 different checks from 4 different tenants, I said, hey, this is the amount of the rent. You guys figure it out amongst yourselves. And I think they like that option because they can kind of, hey, I'll take this room for this amount. And I had no idea how much they were paying per room. I just knew what it is for the full amount. And some of them were like, hey, can I pay mine individually? I was like, nope, I just want one check. And it worked out really well. I felt comfortable with it because all built up income enough to sign for it for themselves. So they all had co-signers. So essentially I had 8 people signing saying that this rent was going to be paid on time. That's kind of what I put that in the intro blurb with 100% occupancy, because if somebody would move out of the house, because it was the full lease, the other 3 would have to come up with the extra. So they would find somebody new to come in. And I let them know ahead of time, hey, you can't sublet, but if somebody needs to leave and someone wants to come in, that's perfectly fine with me. I just want to get their name on the lease. And I felt the tenants, as long as you kept that communication, which was easy for me, I lived 2 blocks away. That was great. And I think most importantly was screen your tenants. I met with all the people who were applying, And the first group that got it, they came over with their tie on. One of them brought their mom, who was a real estate agent, and she was like, "Hey guys, make sure you're doing this more," And so they won me over definitely by showing how much they wanted the place right there. And that was, you can kind of see there's other tricks that kind of tell when you're interviewing clients. Like I heard one that saying, look at their cars, they take care of their car, they'll take care of your house. I kind of subscribe to that one as well. If someone who's coming with, and it not necessarily how nice the car is, but how clean it is on the inside and the outside. If they're taking care of it, and they want their room to look nice, they want their living areas to look nice. So I
Yeah,
never
you
had
go and
any.
pick. You go by the parking lot and pick by the window and see if you don't find any McDonald's bags or anything like that in there, right?
Yeah, exactly. And if they have a McDonald's bag, it's like a trash bag, but in general, they were college students. So it wasn't like I wouldn't have been eating off their back seats or anything, um, but I definitely noticed when people came up with, just trash everywhere in their car. Like, yeah, they
Yeah.
might not take care of because at that point, and it still is my biggest investment. For most beginning and real estate investors, that will be your biggest investment.
How much has a property appreciated?
It has appreciated, I would say about 30% conservatively.
Wow, in only 3 years?
Well, 5 years. I lived in it for 2, and then I've
Got
been
it.
renting
Got
it
it.
out for 3.5 years about right now.
Got it. And you have essentially have like 4 units within that property, right? Because you rented out to 4 different students. Is that right?
Yep, there was, and I told them they could do a fifth if they wanted to, but none of them wanted to do a fifth tenant. So they all just want to do just 4 of them. So that's fine. Um, and it worked out really well for them. They took pretty good care of the house. Anything they didn't, the security deposit covered it. The other thing I did is another podcast idea that I started was there's very few college rentals that will allow pets. So I said, hey, pets are allowed. It's a fee. I charge them $300 per pets. And most of them had a pet. Sometimes 2 or 3 of them were in there, and they didn't mess up the place more than the pet fee. So I thought it was a good deal, and they appreciated it as well because they were, so someone would come to me like, "There's no place that allows pets here," and you do.
Yeah.
So it was good.
Yeah, that definitely will make you stand out a lot. We moved out of state for a while because my wife had a job somewhere else, and we brought our 2 dogs with us. And there were many rentals in the area, but because we had the dogs with us, it just narrowed down to like 3 different locations. So
Yeah.
obviously one of them.
I
Uh,
do. I do recommend meeting the pets if you are going to rent out to people with pets. And I put that in the lease. I was like, hey, it's $300 pet fee. The pet has to be approved by the landlord. Like
yeah, yeah,
'cause you can get a good idea if you're a dog. You can kind of get a good idea by meeting the pet what if they're how crazy they are.
right,
I
right,
mean, they're all
right.
kind of crazy, but
Yeah, that's awesome, man. So you also have invested in syndications and that some flips, correct?
So I have not invested in syndication yet, but that's why I reached out to you. You reached out to me on LinkedIn when I saw that you were doing attach because I want to get to that point where I'm doing syndications. Like I said, I'm a full-time pilot. I do part-time instructing for the Navy, and I do mortgages. And I've been able to find a good work-life balance, but I would like to get to the point where I'm kind of just an investor in real estate. And these syndications, from what I've been reading and talking with you, seem like the best value for a passive investor, which is the goal for me.
Yeah, yeah, I agree 100%. And so you have a self-directed IRA.
I do. Yeah, I set that up in 2018 or 19, and I had a friend who wanted to do some house flipping, didn't have enough for the down payment. We did some research, and I found I could set up a self-directed IRA. I couldn't help him do any of the flip because you can't work on your own investments in the self-directed. I think there are some ways around that if you get a good lawyer and they do like this checkbook kind of one, but that seemed a little too much for me, so I just stayed with the standard self-directed IRA. I lent him money for his down. He got a loan, a mortgage on the property. I lent him the money for the down payment, and he gave me a second lien on his property for that. And it was essentially a hard money loan out of my self-directed IRA to help him complete his flip. And it worked out well for me. I got exactly what the terms were. He ended up making a little bit less than I did on the deal, but he was happy that he was able to pay me back as an investor because that was so important to him. It was his first flip that he did, and he's like, no matter what, you're getting your money back, even if I got it out of my own pocket, you know. And he held to his word, and um, I made, you know, about 1% per month. I think our deal was a 12% annualized. He held it for 6 months, so I made 6% over 6 months, and he made about the same. But so he learned some good things. The second one was much better, but he hasn't done a third one yet. So that's my self-directed is kind of sitting there right now. That's why I was like, hey, these syndications, these look great.
Yeah. 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 That's the beautiful thing with self-directed IRAs, that you can self-direct, right? So you can use the money however you want. Um, I'm not too familiar with self-directed IRAs as far as like what you cannot do. Like I didn't even know about that you cannot work on your own investments. But I do know like we accept self-directed IRAs, and obviously there's people that are specialized in guiding you through using your self-directed IRA. Is there um, how do you go about setting up your self-directed IRA?
There's a few of them online, and I've talked to other pilots that I fly with about which one is the best. There's probably about 5 or 6 of them. If you just Google, they'll come up. They're all about the same kind of fee structure. Usually it's about $500 per year. I highly recommend not using your IRA funds to pay for it because you're limited on how much you can put into your IRA. And so if you're using funds out of it to pay for it, that comes out of you can use a credit card in a lot of them for it, for the fees. So anytime there's a fee on them, I would just pay that out of pocket. So you're not taking away from the tax benefits of the IRA or the Roth. Mine's a Roth, self-directed Roth IRA.
Got it.
Because I think you can do the traditional. Now I'm not a tax professional. I'm not even a financial advisor. So definitely double check me on all the stuff that I'm saying, because I'm just kind of regurgitating what the self-directed companies have been telling me, and fact checking it on my own using my finance degree from 10 years ago.
What are some of the advantages of using a self-directed IRA? Like, what is it that attracted you to do it?
I think more control over your investments. That's the biggest one. I spent a lot of time after college trying to use my finance degree to pick stocks and whatnot. But at the end of the day, you don't get that you can read the balance sheets and the um, with their owner's equity in a company. You can see how well they're doing on their statements. But at the end of the day, they have leeway on which quarter earnings they show, and they can kind of manipulate the numbers, so you don't get as good an idea. Well, with real estate, especially if you or a friend of yours or somebody you're working with has it, that those are the exact numbers. So you get to see everything about that company that is the property. So that's what really drew me to it. I said, hey, wait a minute, these numbers are my numbers. It's not some accountant from a company that I don't know who's telling me them. These numbers make sense to me, therefore I want to invest in that.
Yeah, yeah, I like that. That's one of the things that draws me to it as well. You know, is it's I invest as a passive investor in all the syndications just as much as I'm part of the GP or like the guys running the syndication, but I'm a passive investor as well, just because the benefits are different, right? When you're on the GP and active side, um, there's not much cash flow through the project, right? There's not many benefits. The only time you get paid is really at the end if it performs better. Like every passive investor gets paid. We exceed projections, then we start getting paid as GPs, right? So by being a passive investor through the deal, I'm getting cash flow and all these things as we're holding onto the property. So I like that we can go to a property, we can see it, we can walk on it, we can look at the numbers. It's nothing complicated. It's not Bitcoin. You know, many people have tried to convince me to invest in Bitcoin, but they cannot explain it to me. And so, you know, it's just so simple to understand, right? It's a simple business. You're providing a simple need, which is housing, and that's it. So yeah, man, I love that.
Yeah,
Um,
I think you hit the nail on the head right there with the syndications, where you're not make as a GP, you're not making any money until your investors make money. Same thing with my friend who did the flip. He didn't make any money until I got my money back and the mortgage company got their money back. With businesses and stocks, how many times have we seen big payouts to the board of directors, people who are on the
yeah,
board, who are VP and above, and then the common shares get it, and then the bondholders get it afterwards. So it almost kind of reverses the investment side. So as a passive investor, I like the idea of getting paid before the people who are working there, where in the equities market, it's the opposite, right? So.
Yeah, yeah, absolutely. Dude, I love it, man. So we're reaching here the end of the podcast, but I always like to ask people um, two questions. And I like that you brought up at one point that you listen to podcasts and you apply a lot of the concepts that you learn from podcasts. And it's it's amazing to me how much free information there is out there that will serve you very well. Like those nuggets that you got from those podcasts give you all of these uh, pointers on how to vet, what to pick the right property, right?
Mm-hmm.
Where to pick the right property, how to screen the tenants, how to do like all these little other, aside from just doing a background check, doing the thing where like going and checking the car, go and meet with them face to face, the pet fee, and meet the pet, so all these little things you got for free from listening to podcasts and reading, I don't know, maybe reading a book. So there's so many things that are out there for free that you can get. So what would you recommend someone that is just getting started in real estate and wants to learn more? And what would be a book or a podcast that you recommend?
I would, whatever you're interested in, whether it's single family, multifamily, how to do it with no money down, that kind of stuff, and then just type in real estate book at the end of that in Google, and see which one it is and find out which one you want. I think a lot of people, one that starts is that Rich Dad Poor Dad, and yeah, that was the first one that I read back in 2012. And I didn't start investing until 2017. I got orders to Japan, and I had just read that Rich Dad Poor Dad book, and I was like, I got to do this at some point. And then the Bigger Pockets podcast came out. So I had an hour drive commute from my place I was living in Japan to the military base that I was working on, which is a crazy, unique experience that I had living out in town there. But I would listen to the podcast every day to work. And I think I got through, over 100 of these podcasts. And so by the time I got back to the US, I was ready to start. So much information that's out there. I think I'm finance background. I like numbers. The first book that I read was Everything You Need to Know About Cash Flow, and I think 49 other financial measures. It's a super long title, but if you type in Everything You Need to Know About Cash Flow, the numbers just started making sense to me from that book. And then I started another book and another book and another book. And like you said, a lot of them, I did pay for that book. A lot of them you can go on Audible if you like listening. There's a lot of free ones out there. There's just a lot. Yeah, like you said, there's overwhelming amount of
Free stuff, free information.
yeah,
Or
and
even a book.
podcast is great for getting the dialogue down, or the language of real estate. Because I would listen, I was like, what do they mean by this? And those bigger podcasts do a really good job, especially in their early ones, explaining what all the terms mean.
Yeah, I like that. Yeah, they break it down. They really stop and for the audience, right? They break down each topic. Marty, dude? It was awesome having you in the show today. I would love to have you again once you go and invest in syndication and you have some experience going through it, so that you can relate to people how have you liked it. Maybe if you didn't like it, why was it that you didn't like it? And all that. Dude, but it was awesome, man. We're looking forward to having you again, Marty.
Yeah, and I'm looking forward to continuing our relationship and seeing how it goes there with the syndication. So thanks for having me.
Love it. See you, everybody.